So, welcome to the Monkey Stock Club. For those who are new at this channel, my name is Monkey B. I love to go out there and finding some nice stocks just for you. So all you have to do is just watching this video and decided if the following stock could be something for your portfolio. It doesn't get much easier than that. In return to that, please feel free to hit the subscribe button below and become part of the Monkey Stock Club family, so you will never miss a video again. Please be aware that everything I say here is just my opinion, as I'm not a professional investment advisor. As you can see, I'm just a monkey, but nevertheless, I love to analyze stocks just for you. So let's stick around and discuss some numbers now. Let's talk about ENPHASE Energy. So to analyze ENPHASE Energy, I use the high growth investing analysis with the 6 KPIs that you can see here. For each KPI you can get 0 to 3 points, so in total you can receive the maximum of 18 points for a share. And I selected ENPHASE Energy because from my point of view it's really a nice stock to put on your watch list. From my point of view, they have still a big potential. Let's say double of the price within the next let's say 3 years. And yeah, that is why I want to share the latest news on this stock. So the first KPI is the enterprise value divided by the sales actual. So the enterprise value is a measure of a value of a company regardless of its financing, and if you do the ratio of the EV and the sales actual, you get an important ratio of estimating the valuation of a fast growing but sometimes still loss making technology company. So if you take a look into Yahoo Finance, for example, and you take the market capitalization minus the cash plus the debit divided by the revenue, you received around about 17. So that's far above 12, so 0 points. Here you can also see already calculated. Okay, here's a little deviation, but nevertheless also higher than 12, so 0 points. The gross margin is the percentage of sales that remains in the company after reducing the product or production costs. So if you take a look into the income statements and the balance sheet, etc., within Yahoo Finance, you can get the sales and the direct cost, reduce it by the sales, and then divided it by the sales, and we get 42% roundabout, so that's less than 50%. And yeah, the gross margin provides a good indicator of the profitability of a business model, and the higher the percentage, the more money a company has available for other activities like marketing, development, research, etc. So here yeah, that could indicate that ENPHASE Energy don't have so much money to invest for other things, activities like marketing, for example. Rule of 40 score, trailing 12 months, 72%, quite a nice value. So you take the sales growth rate plus the free cash flow margin, and this is the ratio that you need to use. And the ratio of 40 is a simple key figure for assessing the efficiency of a company growth and also the quality of its business model. And yeah, the higher the value is, the better the business model is of this company. So quite a nice value of around about 72%, so 3 points. Our first 3 points for ENPHASE Energy. Next one, the sales growth, 42%, 3 points, as we are above 40. Here a screenshot of the revenue growth within the last 4 years. So we had a
minor dip from 2016 to 2017, then a nice increase within the last 2 years, and yeah, hopefully it continues like that. Also here the momentum from a negative earnings to a quite positive result in terms of earnings in 2019, so that is why they also performed very well in terms of the stock price. And next one is the debit ratio, 0.9, so quite a good or let's say a low debit. So a debit ratio less than 1 indicates a low debit, while a debit ratio greater than 2 could indicate possible risk for debit. So if you use, or let's say take a look into the debit last quarter and divided it by the equity last quarter, you received 0.9. And yeah, quite nice. So oh yeah, okay, so 2 points. Sorry, I missed it. 2 points as we are between 1 and 0.5. So everything below 0.5 would get 3 points. So that is why we just get 2 points. Last but not least, the PEG is one of the most important key figure for the assessment of an already profitable growth stock. So it calculates the ratio of the price per earnings and the profit growth. And as Peter Lunch already mentioned, if the PE is equal to the profit growth, we received a ratio of 1. That indicates an undervaluation and a good point to invest in a high growth stock. So in this case, if we take the PE trading 12 months, so here we have also the value from Yahoo Finance, 77.66. I calculated 76.68, more or less quite the same value, divided by the profit growth trailing 12 months, 130. We end up at 0.59, so 3 points, as we are between 0 and 1. Quite nice. So it indicates an undervaluation. Okay, and last but not least, I screenshotted also some news while they popped up 7% after earnings. Yeah, okay, so they presented quite a nice Q3. They beat the estimation in Q3 and promised to do it again in Q4, so that could be quite a nice development until end of this year. And yeah, the sales declined a little bit, but yeah, nevertheless, from my point of view, they will further increase the profit. And some analysts think they downgraded ENPHASE stock, but from my point of view, they are quite a nice stock, at least to put on the watch list, and looking into the price development. So what I did in addition to that, I take the estimation from Yahoo Finance, the current year EPS trend 1.28 compared to 1.85 for the next fiscal year. So that's an estimated profit growth of 44, multiply by the EPS for 2021, then we would end up at 82, minus 18% compared to the current price. So that would, yeah, let's say indicates that within the year they will have a little consolidation. But if we compare the EPS development within the last 5 years, so I used I took a look into the EPS in 2017, minus 0.54, compare it to the 1.9 or 1.85, and divided it by 4 years, so every step, so from 2017 to 18, 19, 20, 21, 4 years, then I ended up as an average profit growth of 113. And if we would estimate further development of around about 100%, 113% in the future, as they increase the market share in the future. We would end up at a fair price of 209. That could be an estimation for the next years. So quite a nice opportunity to double your money. So yeah, that's it. I hope you enjoyed the session here. I will keep you updated on ENPHASE Energy, and I would really appreciate if you hit the subscribe button below, become part of the Monkey Stock Club family, and you will never miss a video again. And I will really appreciate to keep you updated on nice investment opportunities, nice stocks, undervalued stocks. So then, have a nice day and goodbye.